Hey traders, Jason here from Levitt Brothers. Hope you're well. So I have a little admission to make. We often analyze the market with the indexes. Okay, how's the Dow doing? How's the S&P doing? How's the Nasdaq doing? What's leading? Small caps or large caps? Okay, we also look at breadth indicators, the advanced decline line, the AD volume line, the percentage of stocks trading above certain moving averages, the number of stocks hitting a 10-day high or a 20-day high or a 52-week high. It's all good. The data collectively paints a picture, but those aren't the best indicators. They're good. In fact, they're very good, and very rarely will lead you astray. But they aren't the best. The best indicator is the movement of individual stocks. It's a bottom-up approach. If the market is healthy, individual stocks will act well. If the market is weakening or not healthy, individual stocks will not act well. Seems simple, and you may argue that this would show up in the index charts or the indicators, but this isn't always the case. Sometimes the indexes are doing one thing, but beneath the surface, individual stocks are doing something else. Let's talk through some examples so you can see what I'm saying. So I'm doing this video both as a general video that you could probably watch a year from now to get an idea of how individual stocks lead the market both up and down, and also to kind of paint a picture of what the current situation is. All right, so let's go through some examples here. All right, here is Futu. Okay, stock has rallied up huge, has been trading in a range for several months, and you could see that recently it moved off its low. Okay, tested a bottom here, was a bottom here, and you can see recently, actually today, it broke out. So if the market is strong, if the market is healthy, this stock will continue up. Even if it moves sideways for a couple of days or something, it will continue up. If the market is weak, it'll just fall right back into this lower range. Okay, we've seen that many, many times over the last couple of months. Stocks break out, they might follow through for a day or so, and then they completely lose it. So the movement of a stock like this is more telling than an indicator or what the S&P is doing. Okay, so it's something you look for. Instead of just looking at the indexes, look at what individual stocks are doing. Okay, next up as an example, Upstart. Okay, stock did well after earnings here. It also did well after earnings there. You can see it came back down. Then it rallied huge. It rallied from 80 up to 160. So it did extremely well. This is a really good sign, because if the market was not healthy, and you can see it kind of broke out there, if the market was not healthy, it would have gapped up over after earnings like this, come back down, maybe made a run up, but it would just kind of fluttered around. The fact that it was able to rally so much in such a short period of time on really strong volume, not really strong, but strong enough volume down here, is a really good sign. The movement of this stock, not this stock in particular, but the movement of a stock like this is more telling than the movement of the S&P. The fact that the stock acted so well and has done so well is very telling. So let's look at another example. Here's CVLT. Stock rallied up, traded sideways in a range. It broke out yesterday on huge volume. Today it gapped down, but then followed through. So this is a great sign. Okay, over the last couple months, we've had a lot of stocks that would break out, and then they would just kind of fizzle, and they just fall back into the range. The fact that this stock was able to break out on huge volume, get some big separation, today it gapped down, but then immediately it recovered. The fact that it has acted so well is a really good sign. Okay, this is a better sign than if a certain indicator was turning. Okay, the movement of an individual stocks are more telling than anything else. Let's look at another example. So Roblox is a stock that we posted on our message board several times over the last few weeks or so. You can see that it was mostly just a neutral stock, trading in a wide range up and down. Resistance level there at 78. Stock broke out, huge volume. Okay, broke out last Friday, followed through yesterday. Today it's kind of holding the gains. Okay, if the market is weak, the stock gaps up, comes up like this, but then closes like down here, and then it might fizzle around and then fall back into its range. The fact that it was able to follow through on strong volume is a really good sign. Okay, here is One Connect Financial. This stock was posted on the Levitt Brothers message board. You can see that it was a weak stock in a downtrend. It had some support here, took out that, but then it gapped off the low. Okay, strong volume over here, got scooped up by its 8, and eventually got support from its 21. Resistance level formed here at 16, and you can see it broke out and we got massive volume here. So if the stock was weak, okay, if the market wasn't acting really well, it would have moved up and then it would have come back down, and like maybe it would have gotten support one time from its 21 and bounced again. Probably not. It would have just fallen back into this into this bottoming range. The fact that the stock was able to rally so many days in a row on strong volume and keep pushing up and follow through is a great sign. Okay, now there's some other stocks that haven't followed through yet. So let's look at some of those. So here's NIO, which has been a fairly weak stock, trending down. Okay, it topped. I mean, obviously you can see it topped here, broke down from there, and now it formed this lower pattern here. It broke down here and then recovered. So we have, let me delete those. So we have a resistance level right in here, and you can see the stock broke out yesterday. Today it followed through a little bit, but is down, but is well off its high. So if the market is weak or not healthy, NIO is just going to fall back into its range. Okay. But if the market is healthy, NIO is going to move sideways here. You can see it got rejected by its 50 there. 50 was important there. 50 was important there. The 21 was resistance there and there. The 21 was resistance there. So if this stock is healthy, it's going to get support from its 21 here. It'll get rejected a couple times by its 50. It'll hold the gain in some sort of range here, and then it'll break out and follow through. Okay, if the market's healthy. And if the market's not, it's just going to fall back into this bottoming pattern. So the movement of NIO is going to tell us more than what the S&P does. Okay, next example, Microsoft. Okay, similar situation. Okay, Microsoft fell off a high. We got a double bottom here. You can draw a resistance level in here. That's also the location of the 21 EMA, which comes in just like this. So if the stock is healthy, it'll consolidate up here and it'll continue up. It'll fill this gap and probably make a run to its high. If it's not healthy, it'll just drift back into this range, and it'll form some sort of like big basing pattern like this. So the movement of Microsoft will tell us whether the market is healthy or not. Another example, Google. Okay, similar type of situation. Stock is strong, trending up, doing well. Double bottom, kind of a double bottom here at the 50. You can see this, support at 50 here, support at 50 here. Came down. There isn't really a clean resistance level, but you can certainly say it like kind of broke out somewhere over here, or you can connect highs over here and say it definitely changed its character. This is a downtrend, and it definitely has moved up enough to reverse that downtrend. So if the stock is healthy, which would imply that the market is healthy, the stock will hold its gains and eventually go up and at least challenge its highs, probably take it out. If the stock is not healthy, which implies something about the market, it'll just drift back down and probably at least test the 50 again. Okay, so the movement of the stock will tell us how healthy or unhealthy the market is. Let's look at another example. Here's Lending Club. Okay, so the stock ran up, came down hard, got a little bit of a double bottom in here. We have a basing period here that lasted, I don't know, whatever that is, 6, 7, 8 days. Then we got a breakout, you can see on big volume. Okay, so if the stock is healthy, it'll hold up, it'll hold the gains, it'll probably find support at the 21, the 8's coming up like this, it'll find support at those two moving averages, and then it'll continue up and probably go at least up to 16 or 17. 17 seems to be a key level from back there and there. So if the stock is healthy, that's what it'll do. If the stock's not healthy, then we're just going to get, a big basing pattern like this, and it could actually break down. Okay, so the movement of the stock will tell us how strong the market is, or if the market is gaining strength. Another example, JKS. Okay, weak stock trending down. Let me zoom in a little bit here. So weak stock trending down. You can see resistance at the 21, resistance at the 21. Then we have this basing period here. Okay, double bottom. And it breaks out of that basing period. Volume is decent, not fantastic. So if indeed the stock is strong, if it's like hinting at something, it's fine to consolidate here. Oftentimes there's so much energy is needed to break the stock out of a base that it needs to rest. If the stock is strong, which would imply a certain amount of health for the market, it'll base here. It'll do some backing and filling, that's fine, but it won't fall too much, and it certainly won't fall back into the range here, and eventually it'll break out. Okay, but if it keeps drifting down, you can see this is the third down day in a row. If it keeps drifting down, then that implies something about the market. Okay, so we have a lot of stocks that are set up and ready to run. Here's IQ. Okay, you can see it popped off the low. It's consolidating here between the 8 and the 21. Certainly, if the market's doing well, this thing will pop, probably go up to its 50. Another one that looks good right now is Plug. Okay, similar type of setup here. We got lower highs, lower lows, weak stock. You can see the 21 is resistance, 21 is resistance here. You got lower low here, but then it, big volume on the update, big volume on the update, follow through. So now we're getting support from the 8 and 21. We got a resistance level up here. So if the market's doing well, the stock should be able to pop and run up. Okay, another one that I'm checking out is Fubo. Okay, talked a lot about on social media. I see it. I don't know the company well, but I just know the chart. So it's basing. It's got a little bit of I guess you can call it like a head and shoulder bottom pattern. We got here, here, and here. So now it's finding support at the 8 and 21. So if the market's doing well, this will pop out. Okay, so this is why I favor a bottom-up approach, okay? And it's why I think the younger generation of traders can be misled sometimes, okay? Younger traders are more computer savvy. They do a lot more scans, but there's something to be gained from actually looking at 500 charts. There's information in those 500 charts that isn't anywhere else. So right now I'm seeing slight improvement. Some stocks have followed through. Others have some proving to do. If stocks like NIO and Microsoft and Google hold their gains and then continue up, the market will do well. But if not, it's the lack of follow-through that is the best indicator. So again, you can look at the indexes, you can look at indicators, or you can do what I do. I look at those things, but I'll just pull up a list of stocks. I'll look at 500, 600, 700 stocks, and I'll get information from that kind of a bottoms-up approach, because it's the health of individual stocks that actually tell me what's probably coming in the pipeline. All right, hope you got something out of this. Good luck, and I'll see you next time.